The US dollar has fallen 10% from its peak this year alone. That isn't just a statistic, it's a sign that the fundamental rules of the economy are changing right now. For decades, the world ran on ever cheaper global supply chains and the unquestioned dominance of the US dollar. In 2025, that entire playbook is being thrown out. We are in a period of intense financial uncertainty that I call the Great Economic Pivot. Hi everyone, I'm George, a PhD economist, and in this video, my goal isn't to scare you, it's to prepare you. I'm going to give you a clear three-pillar strategic framework to help you protect your wealth and, more importantly, find the opportunities that always emerge during times of transition. Before that though, take a moment and subscribe for weekly financial consulting and macroeconomics updates. 93% of you, my dear viewers, are non-subscribers to this channel, and I know you can find some value from this growing community of curious minds. As I've covered in detail before, three massive forces are converging to drive this pivot. In case you missed them, I will link the videos down in the description. First, the 40-year era of globalization is violently reversing. In its place, aggressive and unpredictable protectionist tariffs are creating systemic shocks. This fuels persistent inflation and makes it incredibly difficult for businesses to plan, invest, and hire. Second, the US dollar's role as the ultimate safe haven is being seriously challenged. Deep uncertainty over US policy, combined with an accelerating global movement to find alternatives, means we can no longer blindly count on the dollar to stabilize our portfolios in times of stress. And third, we are witnessing the rapid rise of a multipolar world, symbolized by the expanding BRICS alliance. This bloc is actively building a parallel financial architecture to reduce its dependence on the dollar, challenging the very foundation of the global financial system. Together, these forces are rewriting the rules for every investor. But now, let's turn from the problems to the solution. How do you, as an individual investor, navigate this great economic pivot? Panicking is not a strategy. Instead, you need a robust framework built on defense, intelligent hedging, and selective opportunism. I've broken it down into three core pillars. In this environment, the bedrock of your portfolio must be resilience. This means overweighting sectors that provide essential goods and services, which makes them less susceptible to economic downturns. I am talking about industries like healthcare, public utilities, and consumer staples. But there is a critical nuance for 2025. Focus on companies with strong domestic revenue streams and supply chains. A company that sources its materials and sells its products primarily within the US is far more insulated from tariff shocks and shipping disruptions than one with a complex global footprint. These companies can offer stability through predictable cash flows and dividends, providing a crucial anchor when markets get choppy. For most of our investing lives, those investing in the US or even the US investors didn't need to think much about currency risk. That has changed though. To protect against a structurally weaker dollar and to capitalize on growth happening elsewhere, you should consider allocating a portion of your portfolio to international assets, but with a very specific tool: currency-hedged ETFs. A currency-hedged international ETF allows you to invest in a basket of foreign stocks in Europe or Asia, for example, while neutralizing the effect of currency fluctuations. In simple terms, if those foreign stocks perform well, you capture the gains from the stocks themselves without having to worry that a falling dollar is eroding your returns. This provides true diversification, allowing you to tap into global growth without being directly exposed to the currency shifts we discussed. The key here is discipline. This isn't about trying to time currency markets, but about building a permanent structural hedge into your portfolio. Your final pillar is about playing smart offense. And this has two parts. First, real assets. In an environment of persistent inflation and potential supply shocks, holding a 10 to 15% allocation to commodities makes a great deal of sense. This includes precious metals like gold, which often performs well during periods of economic uncertainty and currency devaluation. And we are seeing central banks globally increase their gold reserves for this very reason. It can also include broad-based commodity ETFs that give you exposure to energy and agricultural products, which may benefit from the same inflationary pressures we are trying to guard against you. Number two, selective growth, and this pivot will create new winners. The move toward protectionism is fueling a powerful reshoring trend. This creates opportunities in companies that support this shift, like industrial automation, robotics, and domestic logistics providers. Furthermore, technology isn't going away. Look for high-quality tech companies with strong balance sheets and, crucially, the pricing power to pass higher costs on their customers. This is not about chasing hype, but about investing in the durable trends that will define the next economic chapter. Underpinning this entire framework is one final critical principle. Liquidity is king. In a volatile market, holding cash is not a sign of fear. It's a position of power. A higher than normal allocation to cash or cash equivalents, perhaps even 20%, is not trash. It's your greatest strategic asset. It provides a buffer that protects you from being a forced seller in a downturn, and more importantly, it gives you the dry powder to seize opportunities when other investors are panicking. And remember, you do not need to implement this entire shift overnight. The goal is a measured, strategic repositioning, not a frantic reaction to headlines. Begin by building out your defensive core. Then, over the next several months, gradually layer in your currency hedges and selective growth positions. The great economic pivot of 2025 is being driven by three powerful forces: the return of protectionism, a structural shift in the dollar's role, and the rise of a multipolar world. This is creating a landscape of profound uncertainty, but it is not a reason to despair. Economic transitions, while disruptive, have historically created incredible opportunities for those who are prepared. By building a portfolio on a defensive foundation, implementing smart hedges against new currency realities, and selective investing in the growth areas of the future, you can do more than just protect your capital. You can position yourself to thrive. The old rules of investing are being a little bit rewritten, if you want it, but within a disciplined, patient, and forward-looking strategy, you can have the framework you need to navigate these turbulent waters successfully. Let me know in the comments below what your biggest economic questions is for the rest of 2025. Thanks for watching, and see you all on Thursday for a thorough exploration on the rise of BRICS. Bye bye.